Look at stocks. Stocks are a really important type of investment that many investors usually invest in. Now, this will be also one of the main focuses of this competition is the trading of stocks, because most of the investments and the securities that will be traded during this competition will be stocks. So now the important thing is to understand what stocks are, what they do, their purposes, and also why we trade stocks. And also in this video, I'll cover on different types of market orders, so how we buy such stocks on the stock exchange. Now, as mentioned in some of the previous videos on the preliminary readings, stock is a part of is owning a part of a firm. So buying a stock gives you ownership of a firm. So a stock or a share represents a percentage ownership in a company. So let's say you have one stock, and let's say in company A, that one stock is worth maybe 0.01% of the company. So by owning a share, you own a part of a company. So an example of buying shares would be, let's say, buying shares of Apple, buying shares of publicly listed companies. Now, what are some of the features of stocks? Now, there are two ways we make money from stocks. The first way is dividends, in which the company will pay all their investors a percentage of their profit. For example, every share owner per share you own, you will get $0.001, for example. So as a payout of the firm's profits to their investors, that's one way you can earn from the stock, because some stocks provide dividends, some don't, but those that provide dividends is a form of income for investors. And capital gains, which is the increase in the price of the asset or the share. For example, if you bought it at 50 and you sold it at 55, you will make a $5 capital gain, so a $5 increase of income. So sometimes if you have large enough shareholding, you can have voting rights in a company and be involved in company decisions, like normal shareholders. If you have a large of a share, you get to influence the company. But usually when we buy on the stock exchange, we will never reach this large enough share, because some of these are held into large firms like venture capital, investment banks, etc. And usually an individual investor cannot get a large enough share unless you strike a deal with the company personally, like large investors. Usually you cannot get a large enough share through the stock exchange. Normally buying through the stock exchange, as buying even like 20-30 stocks is insignificant compared to the total number of shares the firm has. Now, as mentioned, we trade on the stock exchange, and shares are traded between investors. Price is determined by supply and demand. We usually, in the stock exchange, don't buy the shares directly from the company, but we buy shares from other investors. So shares and stocks are traded between investors in the stock exchange. Now, what affects the price of a stock? So demand and supply. If more people want to buy the stock, there's higher demand for it. There'll be less. As more people buy the stock, there'll be less supply of the stock left, leading to a price increase, and vice versa. More people sell the stock, the supply will increase, the demand falls for the stock, and the price will fall. So what can sort of influence the demand for the company? Could be company performance. If the company makes more profits, the demand of the stock will increase, more people will buy. If there's a strong economy, people invest more into the generally stocks around the economy. And if news and expectations, for example, if news is coming out that Apple is releasing a new product, more people will buy the stock, and the demand for the stock will increase, leading to an increase in the price. Now, a bid and ask. Now, it's really important to understand what the differences between bid and ask is. So at any moment, the market has the bid, so the highest price buyers are willing to pay, and ask, the lowest price sellers are willing to accept. So usually when we carry out a market trade, it takes a bit of a delay, a bit of time, because there's a difference between the bid and the ask, because we have to sometimes takes a bit of time for there to be when you get your stock at market price, because there's a bit of a slight delay. So a market price is where a buyer and seller agree. So for simplification purposes, we focus on mainly the market price, so where a buyer and seller would agree, because these are the really important points to know that when we trade a stock is the price mentioned, the normal one is that we read on the screen is the market price. So yeah, here's just a short introduction on stock. It's really important to understand some of these factors and understanding of stocks. This is really the basics on stocks, how you make money from stocks, what the stock represents. So if you buy a share, you own part of a firm, and usually stocks are traded between investors on the stock exchange.